with me is Graham Ashby. He's head of UK equities at Liverpool Victoria Asset Management and lead manager of its UK Equity Income Fund. Thank you so much for joining us. In terms of what you saw from M&S today, it seems that their numbers are okay. It's the first full year under the new CEO. It's encouraging signs, and yet the visibility on the UK high street is going to be more and more difficult. What do you make of their performance in the current gloomy economic environment?
I think it's a very good performance. If you look at the ASDA income tracker, it shows that average households expenditure is down 13% year on year, and yet you have a company where they've increased sales by just over 4%. And they've increased those sales also by increasing margins and improving cash flow.
And they're going back to Europe.
They are.
That's a surprise, isn't it?
Well, I think it's a little bit of a peripheral issue. They've stated that their initial focus is on the UK, and we do expect over the next 2 years at least to be that primary focus. Yes, Europe is a longer-term prospect, and who knows whether they'll be successful or not. I
remember, 5-6 years ago, the big question, of course, is what do you buy when you're in M&S? You don't really know what the company is. It was difficult to see who had tried to grab into its market share. Yeah. Now it seems a lot more focused.
Exactly. I think they recognised with the new management team that actually the offering, particularly in women's wear, became rather confused, and it was actually not a great shopping experience as well. I think what's happening here is a combination of investment in systems, new management, and as a result the product offering is a lot clearer, a lot more attractive, a lot more innovation than there was there before.
So if we look 3-4 quarters down the line, it's going to be very tough on the UK high street. Is M&S one of those retailers that will actually do better than most because it's positioned itself and it's looking at cost cutting?
If you look at their clothing performance, it's steadily improved over about the last 3 or 4 quarters, and we do expect that to continue. If you look at their core customer base, slightly older than maybe some of their competitors, they're actually relatively doing quite well at the moment. So, for example, employment levels for older people is actually improving at the moment. The problem actually is with the younger consumers.
Now, what's your take on the UK banking system? Because today we had, of course, that breaking news from Moody's saying that it was going to put under review 14 UK lenders. Yeah. It shouldn't come as a surprise, really.
No, I mean, the rating agencies are classically backward-looking, but we've been negative on banks for a long period now, and I see no reason to change that. For us, we think that the current environment is positive for the credit generally in some of these banks, but not necessarily for the equity.
And so what's going to turn that? Is there a point where you say, actually, I'm looking to be a buyer in the banks because it looks a lot rosier, or some of them are doing something that I like?
Well, I think the problem is that there's a sort of belt and braces approach from the regulators and the politicians and the rating agencies at the moment. And as a result, I don't think going forward these banks are going to be able to achieve particularly higher returns on equity. So I think it is actually a long-term constraint. Yes, you'll have the odd 6-month period where the shares do quite well, but longer term we think there's much better value and much greater visibility in some of the other financial companies outside the banks.
And so if you tell me some of your favourite sectors, of course the banks wouldn't be in them. What would they be?
Well, we like some of the more general insurance companies. So, for example, RSA, the general insurer there. Also
why? Because it's just more stable?
It is more stable, much more visibility of cash flows with regards to those businesses. We like the industrial companies, which are experiencing, very good margin progression, but also ultimately should get some good top-line growth. And indeed, we like some of the retailers. I know it's very unfashionable, but then again, you can see from the M&S results
today.
Some
of the retailers like M&S?
Well, M&S, we like Ted Baker, which is a niche clothing retailer, has been a fantastic performer and continues to do exceptionally well. Even companies like WH Smith, you look at how they are prospering. Margins have tripled since the chief executive got in 2003, when many of their competitors like HMV and, of course, Woolworths have really struggled.
HMV, it can't really survive, can it?
It's pretty close. Ultimately, I think it's the business model has been under pressure for a long period of time, and it's looking pretty sort of terminal at the moment. It may survive, but I think it's a pretty risky proposition.
And the one sector that actually you'd stay away from?
For us is banks. We like Standard Chartered, but that's about it really. We think the rest of them have a number of issues.